Hello everybody, welcome back. Let's have a look at Bitcoin. We're just going to focus on Bitcoin because we're doing the live stream tonight for the Patreon. So we'll look at whatever it is that we need to look at then. So, I suppose weekends these days, they're not what they used to be, are they? I mean, it used to be the case that everything used to just rally in the weekend. As a matter of default, it would appear that it's completely opposite at the moment. And I can tell you why, in my experience. It's all to do with the chart, isn't it? And as we were saying, I suppose on the live stream last week, which was open to the public, that was a freebie I gave out. But I mean, what we were saying is that look, despite bouncing and having a nice bounce from here, pretty much we're rejected on the 10 exponential here. We have a conversion baseline negative cross here. That's a short signal. That is a short signal right there. If we can just look at it a little bit closer in all its glory, that's a short signal. Below the cloud, conversion baseline, cheeky span below the price action, that's a short signal. And also we had our exponential daily death cross. So that, again, for me is worth more than the simple death cross that people focus on. So this is the one that normally, in my experience, is the one that gets played if there were to be one that gets played. Now, we've been down for quite a significant period already. I mean, this has been so far, from top to bottom wick, 55%. And it can go down further, definitely, especially when you have a short signal like this and a death cross like this. So this bounce was nice, but now what's going to happen, in my opinion, this is the bottom side of the outside range. This is the inside range, this is the outside range. And if we break down below the outside range, then we are in for a nasty fall. I would expect that the drop should take us all the way down to this level here, another 20% down. Talking about areas of about 23, 24,000, between 22 and 24 to be honest. And that is basically just as we had that final little leg up from the 20,000 to reaccumulate, have a little bit of resting time before we carried on with the parabolic move there. And I would probably argue that was the parabolic move. This was all very nice and steady away. And in all fairness, if it wasn't for the pandemic situation and money being printed, this probably would have been the normal trajectory of Bitcoin anyway. So if we think about this as a steady up and away, you can see that this was the end of 2019's mini bear market, and we were steadily going up. We would have reaccumulated and made these little legs up like this. But because of the money printing and this, that, and the other, and there was many other reasons, but it was a forced move, and basically created, I suppose, a Bitcoin that just spiraled out of control to go and basically print this high, which for me, we were saying let's be careful about it back in January when the money flow index hit that peak over here. So these mark the peaks of the previous peaks. One peak 2017, one peak 2019, one peak 2021. But alts, we all know the story. I don't need to go into detail, talk about it all the time. The question is what's going to happen now. So all eyes are on the on this zone here where we bounced from last time. Look, in my opinion and my experience, the more times we touch a resistance, just like the more times we touch a support, we're likely to break from it. Now, given the fact that we've got short signals, death crosses, it would lend itself to pressure from the downside. Now, people on my Telegram have been saying what's going on with all the short stacking yesterday, and I think without there's no conspiracy about it. I mean, the charts here are only giving shorting signals. I suppose that would be the easiest way to explain it. It's not that people know anything that we don't know. It's that the chart is telling us what we can all see, which is that there's no buying signals here. There is only confirmed short signals. This is a short signal here. So this is bearish. The death cross is bearish, moving averages are bearish, but this here is a short signal. So for those who wanted to play it, or who dared play it, you would short any of these exponentials, whether it's a 10 exponential, which is more or less where we were rejected, candle closes, or we could think about the 21 exponential or the 20 simple, the center of the Bollinger Band over here on the 4 hour on the daily. If you move it to the 4 hourly, things become even more obvious when you see the general Bollinger Band strategy being rejected from the top, coming all the way back down to the bottom. So it's I suppose for some people they might think they might want to think that there's more to it than that, but there really isn't. And looking at this, we're going to incur a further short signal on the 4 hourly, which might be the thing that pushes it over the edge. So we might dance around the bottom of this Bollinger Band, have a little anemic bounce up, and then come back down again. But we're going to get this negative cross, just like we've seen on the daily. So dailies obviously take longer to play out than a 4 hourly would. 4 hourly is likely to get this conversion baseline cross in, well, it's difficult to say, these tick in different speeds, so we'll have to keep our eye on it, but it very much looks like it's going to tick bearish and give that short signal. So like I'm saying, this isn't just bearish indication, this will be a short signal. But you know, I can't give you any more than that. I mean, that is what that indicator suggests, and they are pretty reliable indicators. You can enter the short upon the short signal, but I would say that the best entry point has now been missed, because if you've not entered that short around these zones here, then that's your perfect entry point. The short signal was created all the way over here, so we had 1, 2, 3 opportunities to get involved in that short if that's the way you want to play this. Again, I'm not a massive fan of derivatives. I am doing a little bit more now than I would do normally, because I suppose it's one of the only options we've got in the short term until things start to recover. But yeah, I mean, that would have been the opportunity. The reason I say short after the short signal at the resistance is because this will give us the opportunity to get in and also get out. So when this GQ span touches the price action, that's time to get out. And obviously we're not looking to do that anytime soon. God knows when that'll take place. And so this might be a short that could go on for a long time. It might be a short that gets wiped out pretty quickly. Either way, the opportunity to short this on the daily time frame has been and gone. The entry point has been and gone. But if we were thinking about the 4 hourly time frame, it would be a much shorter short, if you know what I mean. And that confirmation hasn't yet kicked in. And when that does, I would imagine that would be the driving force, the last nail in the coffin to push it down further than our last wick of 28,000. Probably push us down to, or maybe over a short space of time, down to about between 22 and 23. But again, you know, we're still within the range. At the moment, we're still within the range. Anything could happen, but looking at the chart, the indicators suggest that the direction is going to continue down, and it will continue down to around those levels. You know, the bottom area for me at this stage, the next area that we've marked off is 22,700, more or less. But this is a zone in itself, to the high of 24 to a potential low of about 22. So, yeah, not much to it. But the lower we go, I suppose the more interesting it is for buybacks. But obviously, the more lines we're going to have to start adding to it. And I would say that probably after this we may think about 20,000 as a support, but I think it's only a psychological support. I think if this area does break down, I think we have to consider deeper lows between 16 and 18,000. So that would be more of a boxy zone rather than an actual a flat area of support. But yeah, between this kind of zone, I think would be the potential bottom perhaps. And if that breaks, well, you know, we are thinking about something like 12,000, something along those lines. But we've got to take things level by level. And like I say, you know, I've said it all the time. I say it on my live streams and stuff. Look, if we think about Bitcoin entering a bear market, which now, you know, it certainly appears to be more of at this level that we're at right now, for instance, you know, does become more of a realistic concept that we are going into a bear market. Because we can only really entertain the idea of a bear market, you know, when it is confirmed. We can't just say the price is going down, and because the price is going down, it's a bear market. I mean, price goes up and price goes down all the time. Doesn't necessarily mean bull or bear market, but I think we can start to entertain it a bit more seriously, that a bear market might kick in, and if that's the case, then it will likely go down for an extended period of time, potentially to these lows. But again, it's not yet confirmed. But I am beginning to warm to the idea that these areas will likely get taken out. Potentially all the way down here, maybe all the way down here. So we're talking about another 60% retracement for Bitcoin. But again, you know, we have to take things level by level and see where things are. On the way down, people always have to think about where it could potentially go down to. Just like on the way up, you hear people talking about Bitcoin's going to $1 million at the end of the year. People want to incrementally see where it could possibly go up to. So when I say Bitcoin 12,000, it doesn't mean it's going to come down to 12,000. We could have already reached the bottom now. technically. I mean, there's no reason why we can't consider this already to be the bottom. We've not made a new low on it yet, even though it looks as though we probably will. We haven't. So I suppose to put all your eggs in one basket and say, well, I'll tell you what, I'll wait till it gets to 12,000. That's fine to do that, but it might never do that. So this is why I always like to look at things level by level. And so just because I said the word 12,000 doesn't mean it will hit that. Just like when someone says $1 million doesn't mean it will hit that. They're just all levels that best and worst case scenarios. Do you know what I mean? The idea is that we're probably going to go down a little bit more, and each time we go down, we have to look at specific signals and signs about how it's going to potentially reverse from there. But for me, it's not a matter of trying to catch a bottom. It's trying to scale into zones. So all this area has been bought up for me. Fine. I'm not interested in this area. This area, I might entertain it, but I'd have to see some support being created around this zone, because if we do break down from here, we are in a bear market. So I'm not so much thinking about buying on the way down in a bear market. If we are a bear market, I'll be more interested in buying, I suppose, the official reaccumulation at the end of the bear market, which is unlikely to be at this level, more likely to be at this level, or maybe a little lower. But again, it's just because I'm putting all this out there doesn't mean that you have to reach for your anti-anxiety medication, start breathing into paper bags and curling up in corners and shaking and shivering. If we do go into a bear market, we spend much less time in a bear market than we do in a bull market. So the idea, I suppose, is to wait it out if that is the case. If you want to play derivatives, then that's definitely one way you can deal with it. But if you've never diced with derivatives in the past, probably bear markets are not the place to start because they can be very choppy, and there's only so far it can go down to. You know what I mean? So, but if you wanted to try them, that's what I'm saying. I know people are anxious to try derivatives. You can use Bityard and set up a Bityard account, and there's a demo account on there. You can practice with fake money. So maybe if it's something that you want to learn, obviously you need to understand charts. You need to learn how to read charts yourself. Learn the charts. Practice on the demo account for Bityard, and don't put any real money in. If you can handle your demo account and manage to treat it properly, like it is real money, and you see that you're making more wins than losses, and your account balance is going up more than it's going down, then maybe that's a sign that you might be able to try using derivatives with real money. But don't just go throwing money in. I'd say if you really wanted to do it, and if no one's going to be able to stop you from doing it, start with Bityard and start with the demo account and just try to do it. And if it's not working out, you have to keep trying, and only try doing it with real money once you're confident that you're able to make more money than you lose. Because everybody loses some money on derivatives. There's no trader out there, despite what you might see on Twitter, that makes epic trades all the time. They don't. They just don't tell you about the bad ones they make. Do you know what I mean? So, and then for me personally, I only trade derivatives or leverage when there's a very, very obvious opportunity. The vast majority of the time I don't do it because it's not that. I mean, you have to really concentrate on where it is that you're placing your short or your long, because you're borrowing at this point now. It's not just getting a bad entry. A bad entry can end in severe pain if your risk management is lacking. Anyway, I've gone on for too long about derivatives, but I know that there's a lot of people wanting to do shorts because we're in a bear market. That's one of the only things you can do to gain serious money in a bear market. But if you've never done it before, I know you feel like you might be missing out and you want to try and make up for some losses, but if you're completely new to it, you've never done it before, I would seriously suggest that you try and practice and prepare yourself for what could potentially be even bigger losses. Anyway, I'll leave it with you there, but thank you for watching. I hope you have a nice day and a good weekend, and take it easy.